You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is Thursday. It is noon Central, 1 p.m. Eastern. Yep, it's time for the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you are listening to this fine program right now. Hope you guys out there are staying small, staying nimble, staying safe out there, and most importantly, also staying sane out there in these crazy, trying, turbulent times. I'm going to give you a little bit of an ease of your burdens for an hour or so. So kick back and join us here on this options-oriented journey through what the heck is going on out there. Make sure you keep those questions coming. We love to hear from you guys. And if you like what you hear, leave a review on your platform of choice, however you listen to the show. We love to have you guys coming in and joining us every episode. And joining me on the program today, first off, let's go back out to a sleepy hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Mike TOSAW from St. Charles Wealth Management, back from his very dubious and dangerous assignment. Uncle Mike, welcome back to the program, sir.
Always happy to be here. Got a lot of words built up from not being able to talk on Monday, but excited to be here, and thank you for your forgiveness and not having me be dead to you anymore.
You were briefly dead to me, but now you are alive. Once again, it's amazing how that works there. Back and forth, the give and take, the yin and yang of the Option Block. And also joining us from the far, far hinterlands of these here United States listeners, all the way out to the dusky shores of these fine United States, the shoreline of a little area known as Maine, where the clam pirates rampage to this day, where we are joined once again by the Rock Lobster, Mr. Andrew G. from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program to you as well, sir.
It's good to be back here. It's good to, I felt that I was a little worried. I had to practice the mute button on and off a couple times just to make sure, because I don't want to slack, when I'm only on now about 1 week, once a week. Seabass he's rolling. So only 1 week, one time a week for me now. So I got to be on my game today.
You got to practice. You got to practice that mute button. Luckily, you've had a few years to hit that mute button. I heard something recently where when people go on Jeopardy, the first thing they get taught by the producers is they give them a pen for the final Jeopardy, but they say, don't use that as your clicker. That's not the buzzer, because apparently some people have done that and they've missed out on big prizes. So you, Mr. Rock Lobster, stop clicking your pen and thinking it's your mute button. Indeed, it's the big red button on your microphone there. And also joining us from parts unknown, I guess we'll find out. He is the other Andrew 2.0, Mr. Andrew Rocco, a.k.a. the educational content strategist over there at TradeStation. Andrew 2.0, welcome back to the program to you as well, sir.
Thanks a lot, Mark. I love the nickname. I'm actually coming from Miami today, so I've been locked down in quarantine, had a lot of time to focus on my trading, but I'm kind of ready to go back to the beach, to be honest with you.
Poor you, locked down in Miami. It's such a horrible place to have to shelter in place. Granted, you can't go out to the beach or check out the fine nightlife of Miami, but still, there are worse places, I think, to have to be right now than Miami. And there are worse places for us to go than the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. Got another weird one, which I think is just par for the course now. Another day, another episode of the Option Block, another bit of weirdness unfolding in the broad markets. It's kind of been a confusing, somewhat conflicting week. Coming into showtime today, we're seeing most of the major indices back in the red. They were S&P, the Goldilocks, off about 1.25%, the Dow off 1.5%. So a rare day where the Dow is leading the charge to the downside, and the Nasdaq off about not even 0.75%. So the laggard of the bunch, which I guess when it's a down day, you want to be the laggard of the bunch. Oil up quite a bit, about 17%. So we'll get to that more coming up in a little bit on TWIFO. Also going to talk some small caps and what's going on from a vol perspective and everything else out there. So stay tuned for that. Gold coming in a little bit. And our old friend VIX Cash back up a bit since our last show, up about 2.5 handles, puts it at about 35.25 or so. Our old friend VVIX, aka the volatility of volatility, is about 118, so up about another point and change. So still very frothy, hovering around that 120 level. And our old friend VXX at about a 38.5, up about half a handle. So the vol staying firm, staying frothy out there. But as I mentioned, it's kind of a weird week out there. Very, very conflicting data. Yesterday, of course, everything was in rally ho mode. The S&P up about 2 2/3%. The Nasdaq up 3.5%. The Russell up nearly 5%. I mean, just insane numbers. The Dow up 2.25%. Seemed like everything was right with the world. We were all excited about the data coming out of Gilead with their drug there. Then today comes in, new day dawns, different data hits. Of course, the latest unemployment numbers for April, another 3.8 million unemployment claims. That brings the total to about 30 million jobs now lost to this pandemic, lower than it has been, the catastrophic numbers of 6.6 million and so we've seen in the past, but still obviously a horrific number by just about any measure. So that, of course, weighing on the markets today. And a lot of back and forth conflicting data out of this Gilead drug as well. Yeah, everyone was all excited yesterday. It seemed like, remember 2 weeks ago, we were all excited. Then last week, we weren't excited because it seemed like some leaked WHO data said the early results weren't promising. Then yesterday, it seemed like they were promising again. Even Dr. Fauci coming out saying this maybe holds some promise for treatment. So that got everybody excited. We're all rally ho mode again. And then now more data coming out, maybe on the Chinese trial saying it's not as effective. And also, this is doesn't really impact mortality either, which is obviously the big thing everyone's focused on. So maybe a little bit of back and forth there. Then people are more excited about a potential for a vaccine coming out of Oxford. They're actually in human trials as we speak, which is very fast for a vaccine. They're hoping to have results available by mid-June, which again, people were saying at the best 12 to 18 months. So if we could have potentially results of a human trial by June, again, the vaccine is what everyone's going for. They want to get that herd immunity built up as opposed to a treatment that helps mitigate symptoms but doesn't really impact mortality. So that was a bit of a hopeful sign. But then we see the death toll numbers may be completely out of whack, and overall death tolls in the U.S. are up dramatically over this period from when the virus really kicked off. And that, of course, the difference from the average is not just what happened with coronavirus. There's a lot more baked in there. So people are thinking maybe people are avoiding treatment for basic issues, or maybe even things like heart attacks. They're afraid to get treatment early because they're worried about going to the emergency room for obvious reasons. And so as a result, the overall mortality rates are up enormously. 9,000 just in a few states that they studied here, 7 states that were some of the worst hit by the coronavirus and more across the U.S. people are digesting those numbers as well. So again, there's a lot of conflicting data out here, and it seems like the market has coalesced around the fact that it's all bad and we're moving back to the downside again. So a lot to parse. Let's go back out, since he hasn't joined us in a little bit, let's go back out to TradeStation land. Andrew, it's been a little bit since we've checked in with you guys. Obviously, these are very busy times in the market. What is lighting up your tape over there, and what are the folks at TradeStation? What are they up to? What are they trading over there in TradeStation land these days, sir?
Yeah, so as far as individual names go, Boeing, BA, and USO, the United States Oil Fund, were the most unusually active trades in TradeStation. And Boeing obviously makes sense in that it had this huge move down. It had those 737 issues, which were ultimately made worse by the pandemic. And then price just had this vicious reversion to the mean. So volatility has been contracting a little bit in that one, but we are seeing more trading in that. I did see some calls, some 300 of the June 200 calls go off in Boeing. So could go either way, have to be prepared for both, but a big move could be coming there soon. USO is one to be careful with. It has seen kind of this influx of retail money and funds come into it overall, so much so that it nearly got stuck in that May futures contract, which went negative. So anytime I see an ETF do a reverse split, that's a caution flag for me. So that one is an avoid on my list. And then another interesting thing is that people continue to stick with the big underliers. SPY concentration was much greater than it usually is for us, even more so than the Qs. So if you want to read more kind of about what our clients are trading, you can always go over to the Insights blog for TradeStation, which is insights.tradestation.com. And we always go over what our clients are trading that week.
USO, has something been happening out there in that name? I'm not familiar with that name there, Andrew. I'm not certain what you're talking about.
Yeah. So they had a huge position in the May futures contract. It's an ETF that's trying to mimic oil, and they kind of got caught in it, and now they're trying to wiggle their way out of it. But they actually made up, I think, about a third of that May futures contract. So that wasn't good for that ETF. And even as oil's been coming off the lows, that one's kind of been lagging. So again, like I said, it's a red flag. I would stay away.
I think Andrew's new. He doesn't get my sarcasm yet. We've been talking about USO for quite some time out here. It's top of mind for a lot of people. If you guys want to deep dive, I think probably get some more listener questions about it later in the show. I'm sure we'll probably get to it again. If you want to deep dive, check out the TWIFO episode we did last week, all about all things going on with WTI and the intermingling / dance going on between WTI and USO. It's pretty fascinating to see how these ETPs play a huge part in the futures curve out there. Of course, USO was supposed to track that front month WTI future and then ever so predictably roll out to the second month on a very set schedule. All that's out the window now, obviously for a lot of reasons. Massive inflows. They had to keep piling that money into WTI, so much so that they hit position limits across the board. So luckily their prospectus allowed them to do some wiggling. And so they started going out first 80-20 front month to 20% second month. Then they started going full the way out the curve. I heard they're out to 2021 now and stuff. So they're starting to be much more spread out throughout the curve. They've thrown away their old rolling structure. So a lot of the things that I think you might want them to do to keep this thing alive in this environment. They, of course, just reverse split 8-1 as well. That could be an interesting, as Andrew says, it's a bit of a cautionary flag. We'll get to more of USO, I think, in a little bit. But again, there's a lot to unpack about what's going on out there in these quote-unquote Franken products, as I've called them many times, that do different jobs and are able to track different futures with differing degrees of ability out there. Let's go back out to the other Andrew 1.0, a.k.a. old school Andrew. Mr. Rock Lobster, what is lighting up your tape, and what are your crazies in the pit chat up to these days, sir?
Oh, my gosh. What are they trading? To be honest, a little bit of everything. Just big name stuff, strangly action, buying strangles, some earnings plays, just trading like pre-earnings. Stocks move, they exit positions, stuff like that. They're just actually they're trading the market, man. Things are moving around, so they've actually been pretty active. Mostly just buying stuff. strangles. We have a lot of strangle variations, pre-earnings and things like that. So, and it's what fits people. But they've just been trading the moves, and it's been going okay. The second part is, a little bit of weirdness involved today. Because I'm looking at how the VIX curve is set up, and it's kind of pretty flat for as high as it is. It doesn't normally look like this. And then we had a little contango yesterday in the 30s, and I think everybody's just 30 vol. But if you remember, this is like multi-year highs sustained where we are. So it's clearly because how many people, 20 or 30 million people are out of work. So nobody knows what the heck is going on at this point. I think the curve reflects that. So what is seeing is now there's there's been that kink in the curve from the election, the OCK-NOV. So there's a lot of the NOV contract buyer. And they're just holding on to it like they think something's going to happen. I'm sorry, I think they're bidding the October up, which is still odd to me, and I think that's a liquidity issue. Because the contract, that October's contract's going to expire, but it's holding the November VIX. So you would think, wow, even 3 weeks before the election, when October expires, they're expecting a pretty big bid going in. So this has been around. That kink has been around since I don't know, probably 5-6 months ago, maybe. It's hard. I'm trying to go pre-COVID and post-COVID, but the second part is the 30 vol that we still have, and I think just part of this is the market's trying to adjust what we look like sort of after the lockdown, and people try to go back to work. A lot of uncertainty around it, and I think the curve is it's reflecting uncertainty around as people go back to work and businesses open. I don't think really anybody knows it's a slam dunk. And there's still a lot of stocks that really have not recovered. A lot of them, tons of them. Like a lot of the big names have, which is what most of the people in our pit and our pro chat room have been trading. But a lot of just we'll just call them Main Street stocks that are just in the dustbin still. So I think you almost have a tale of two markets when it comes to all that. So I think that's what we've been looking at. And as far as vol goes, have we seen the vol highs? Probably, unless we really start moving quite a bit again. Even the move we have today is barely over 1%. It's not that big. It feels like it's a VIX vol move that's going to be hard to sort of stay up unless we have some real follow through. So, and I think we're just going to have more of the same. I guess we could go higher before all this is over, but now that the earnings are out, at least for a lot of the big tech, people kind of you're getting a sense of what's going on, and you can't imagine this next quarter is going to be any better than quarter one, right? Because now all those people are out of work. All those businesses are really suffering. You only had a little taste of it in Q1, just the tail end of March. So I think that's where we find ourselves. Maybe I thought we could get into like the mid-20s for the May cycle for VIX, which would still be zone 4, still very high volatility relative. And, unless something happens that's extremely positive, where I think people just stop worrying about getting the virus, which is clearly has not gone away. That worry has not gone away by any stretch. I think we're going to get more of the same, more of what we're seeing right now.
I think that's true about the two markets effectively out there, right? We do have this kind of bifurcated market where we have some of the large names have mostly recovered. You could take issue with that or not. I mean, we have this massive devastation to the economy. A lot of the smaller names, again, we're going to be talking about Russell 2000 later on at TWIFO. That landscape has been decimated. And, of course, even smaller, getting out to the small businesses and things that have employed a large swath of our economy, they have been annihilated. And there's no And big companies are taking their payday loans and everything else, and so they can't even come back. So there's a lot of question, even if we do have a treatment and a vaccine, whether any of this damage can be reversed in the near term, which makes some of these recent rallies we've had somewhat head scratching. We have earnings season kicking off, and a huge swath of the names out there are rallying on effectively no guidance. They're saying we can't possibly predict what's going to happen, and yet their names are still rallying. So we are in somewhat weird and rarefied air. Before we keep rolling, Mr. Andrew 2.0, we got some of our live listeners, including this guy who goes by the creative name of hashtag. I like that, with 2 G's. Hashtag with 2 G's. He wants to know, we were talking about TradeStation folks. They were trading USO. He wants to know, are they also trading XOP, sir?
Yes, they have been trading XOP and also XLE. And that's interesting you asked that, because when oil had the 40% down day, I think it was last week, and it went negative, a lot of the XLE names, or the names that make up that ETF, were actually down about 2%. So there was this huge divergence. I think that came from some of the supply issues, again, with that May contract. But the individual names held really well, and it was a good clue, because you saw names like Apache. As soon as that pressure was relieved off of crude, names like Apache and Parsley Energy, APA, and PE, those flew to the upside. So that was interesting to see.
I like that. I just like that handle. Hashtag with 2 G's. Good question, sir. All right, Mr. Uncle Mike, sir. Same question for you. What is lighting up your tape out there in the quiet, indeed scenic and provincial environs of St. Charles, sir?
Yeah, I mean, this is kind of a tale of two markets in a lot of ways, and that the big names are going higher and the smaller names aren't. And I think I've been talking about this on the show for a while. For big name companies are going to be okay through this, in that McDonald's is going to survive. Joe's local hamburger shop likely won't. And so that's what often happens in times like this. Now, in terms of the stock market itself, McDonald's makes up a lot greater part of it than the smaller companies. So that's a big reason as to why the market is actually staying as strong as it's staying. I mean, we're down roughly 10% on the year, given the fact that we've had all of this virus activity or virus scare. I think that says a lot for our economy. Now, granted, we pretty much gave away free money and said we'd buy corporate bonds, or the Fed did. So that is definitely a help in such a matter. But the fact that we are at these levels gives me a reason for optimism. Now, me personally, in the aggressive trading section of my portfolio, I'm still in 99.9% cash, so I'm still very much on the sidelines. So I'm not putting my aggressive money where my mouth is, so to speak, for clients. But I follow my trading rules. I think that's something that's very important, as any successful trader would agree with. But where we are right now in our society is that it seems like if you turn on the news channels, if you go to CNN, oh, that Trump, he's so evil. Or if you go to Fox News, oh, those evil liberals, they're horrible. And so it's very difficult to get the straight story on things now. So what I try and do from the standpoint of medicine, I've been blessed. I have a lot of doctors as clients. And so I try and listen to what the doctors are telling me on the front lines, the people who are actually there, people I actually know and trust. I mean, that's how I try to get the straight story of what's actually happening out there on the front lines. And then in terms of the economy, the people that really know, the people that are beyond Fox News and CNN, are the people that have lots of money. And the people that have lots of money, they like to play the stock market. So in other words, if we are really facing a huge global pandemic, meaning that we're going to lose millions and millions of lives, then I have a hard time believing that the stock market would only be down 10% on the year right now. Is this going to hurt our economy? No question. Are there people that are going to be losing their lives? No question. But from the source of that we all have, that we can all look at, that is always right, typically, the market, it's only down 10% on the year. And so with that, it makes me think and at least hope that better times are ahead for our economy. yes, there are a lot of small businesses. I feel for small businesses right now in that, I'm a small business myself, but thankfully my small business is based on big businesses in a lot of ways, the market itself. But I think that as we continue to go through this, we're going to see the bigger companies continue to rise. If we look at Google the other day, in terms of things that are lighting up my tape, Google going up roughly $100 on their earnings. So we have that. We have Apple today after the bell. So that's definitely going to be something with which we watch as well. Netflix is in a similar area to where it was before their earnings, just based on all the performance that Netflix had going into earnings. I don't know what they could have possibly said during earnings to make it that much better, but things are going well for them. So I think this is just a time to where I'm not ready to go all in with aggressive trading money as of yet, but I think this is showing, at least for now. I mean, this could change in 1 second, of course, but this is showing the overall strength of our economy and the confidence that we have in our economy. The fact that we could be facing 20% unemployment in the very near future, and the market's only 10% off, that's got to be a good sign in some way, I would think. So I know I'm the permabull of this bunch, but that's what I'm seeing out there right now.
That's why I like you, Uncle Mike. Can always look at a glass half full. Somebody can look the other way and say that's complete madness. We should be off more. So there's many ways to interpret that. But I like yours. It's very positive and optimistic. All right, let's get to it, listeners. We are in the teeth, the throes of earnings season. The numbers are hitting us hot and heavy. If you want the latest updates, the latest reports, the latest analysis, theoptionsinsider.com is the place to go. Just click on that Options News and Articles tab on the homepage. It'll take you to the earnings move, the earnings move results, the earnings move reports, the earnings season reports, all that good stuff. Hot off the presses, the latest updates. Let's get to it. First off, we've had some big names popping off this week. Let's start with Facebook. They reported on the 29th. They closed going into the report at 194.19. They were pricing in 4.6% in terms of a straddle move, and they delivered 4.9%. So pretty much in line. Again, this is just close to the open, looking at that initial move for the report there. That's all. That's not looking at intraday movements beyond. They could have outperformed since then. It all depends on your holding period and your frame of reference, but we're just looking at snapshot to snapshot here, how they literally perform versus what they were pricing in. Let's see what else we've got here. Tesla, a name a few of you may have traded out there. It's back up to the ridiculous levels of 800.5 as of the time of this report. Also ridiculous, some of the comments coming out of Musk and company out there, but we'll save that for another day. Let's see. I guess this is the day that ends in Y if you're getting crazy comments out of Elon Musk. They were pricing in, they were pricing in about almost 9%. 8.9%. They actually under-delivered. They delivered 6.7%, or they got up about 54 handles or so they moved. Of course, wait a few minutes in Tesla, that could probably change, but at least in the initial blush of this report, they under-delivered. Good old softy, Microsoft. They closed at 177.43. Going into this report, they were pricing in 2.9%. They delivered 1.1%, underperforming there as well, even though the street kind of likened what they were up to out there. I have their numbers out here. And the CEO said they've seen 2 years worth of digital transformation in 2 months, from remote teamwork and learning to sales and customer service, critical infrastructure and security. And so they're working alongside our customers to help them adapt to this. But they're saying they're seeing huge growth, and yet the market kind of shrugging on the overall numbers, even though Microsoft has been in our top 10 pretty much movers and shakers from a volume perspective pretty much every day. Who else you got here? Twitter also popped off. They're actually before the bell today, and they were pricing in a whopping 8.6%. So pretty hefty amount of juice. They actually delivered 2.5% in the other direction. They closed at 31.09. They were at $30.30 coming into this report. So dramatically underperforming from a vol perspective out there as well. Let's look ahead. The season report is here as well. You guys can check that out for yourself. Still early in the season. Let's look ahead. A little fruit company Uncle Mike may have mentioned earlier there as well. They are popping off after the bell today. At the time of this report, they were $287.73. They were pricing in $10.79, so not percents, actual dollars here. And in the past, they've moved $11.28. So underpricing. It's kind of a trend we've seen across the board this season. It has surprised me every time I've seen it because you might expect more vol given just the sheer level of unknown variables we're all facing right now. But everyone's pricing in a little bit less. Gilead, another name that has been in the headlines a little bit over the course of the past week. Seems like the whole market now is ebbing and flowing based on the latest results out of Gilead's clinical trials here. They were $83.14 at the time of this report. The market was pricing in pretty much $2, $2.01 to be precise. And in the past, they've moved $2.24. So even Gilead, the market, or I should say the name upon which the market is hinging right now, is underpricing a little bit of vol out there. So these are strange times that we find ourselves in right now. I encourage you listeners, if you have any interest in any names, pretty much check it out there, theoptionsinsider.com. There's 13 pages of tickers just here in front of me. I can't possibly even begin to scratch the surface on this. So again, check it out for yourselves, theoptionsinsider.com. A lot of great stuff there for you guys to parse as we keep on rolling. It's time for us to parse some weird and wonderful paper. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, these are weird times, so what better thing to do than to parse and analyze some weird activity? Now, this is usually the part of the show where we unleash our eye of Sauron. It's always watching, always evaluating the markets, but I like when we bring on Andrew 2.0 and his crew over there at TradeStation because they have their own scanners and analysis software that they're always running on the market as well. So I like to see what other folks are finding and highlighting for our edification out there as well. So Mr. Andrew 2.0, have at it. I know you guys have been busy analyzing some interesting activity over there. Hit us with your first name, sir.
Yeah, so in TradeStation, one thing we do to track this unusual activity is use something called Hot Lists. That's our app for that. And what that brought up for me is Beyond Meat, which we all know it's a crazy trading stock right now. It's pretty hated, high short interest. I've seen a lot of action in the May 22nd, 115 calls. So it's an interesting play because there has been some issues with meat facilities across the U.S. So fake meat, not my favorite, but for other people, it might do the trick. So worries of those shortages are kind of ratcheting up. Earnings are coming up, so we might see some sort of pre-earnings run up if it acts well on that activity. Also, going back to Gilead and the remdesivir, we have been seeing a ton of action in that stock, of course, like I'm sure you guys have seen, but most of the action I've been seeing is concentrated in August. So while the price action has been kind of mixed recently, I did see 8,000 of the August 125 calls bought. So that was also something interesting to watch. Of course, we have binary events like earnings coming up, and I do think they might have an announcement as far as remdesivir goes as well today.
AUG 125s. Maybe we'll start there. We'll get back to Beyond Meats in a second. But Gilead, obviously, like I said, only somewhat tongue-in-cheek just a few minutes ago, it does seem like the market is hinging now on the latest results out of Gilead. Gilead right now, by the way, listeners, 82.37 off about $0.75 or so. So a relatively tame day for them. Let's just look back over the course of the past year and see the epic ebb and flow that has been Gilead. I mean, you expect a certain amount of drama out of a biotech anyway, but then this one now, which potentially has one of the early linchpins to this global pandemic, that's just a different order of magnitude out there. A year ago, they were trading a little bit shy of $65, $64.87, and they kind of did the usual biotech dance. They sold off 63, rallied back up to 69 by June, and they kind of bounced around in that range, high 60s, low 60s for the better part of the year until this year kicked off. I wonder what could have happened at the end of January this year. Oh, yeah, that's right. A little thing called global pandemic. And all of a sudden we saw Gilead go from, on January 31st, it was $63.20. Within a week, it was back up to almost 70. And then within a couple of weeks, it was 75. And then we saw it cap up really quickly up to 22. So obviously a lot of hopes were pinned very early on that drug, which, by the way, I love the names of these pharmas. They try to find the most ridiculous, least, not patentable or haven't been easily trademarked names, and they make up these kind of just ridiculous series of consonants and syllables to throw together, and that's a drug name out there. But then we saw the usual biotech dance again. It went from $80 all the way down to $68 again back in mid-March as the market sold off. So did Gilead, a little early hopes not looking good, then bounced right back up. Pretty aggressive V-shaped recovery for them, back up to about $80 again, less than a week later, then back down to shy of 70 again, and then back up again a few weeks later to looks like 80, about 84, and then sold off again to 77, and back up to where we find ourselves right now, about 82.30. So that's been the long sordid tail. That is Gilead right now. Now, going out to August, they do have earnings, like I mentioned, after the bell today. August, you said, Andrew 2.0, it was 8,000 of the August 125s that were bought. Is that correct?
That is correct.
That's a pretty aggressive outlay, Mr. Rock Lobster. Any of your crazies in your pitch chat, have they been slinging any Gilead of late, A? And then B, what are your thoughts on these? These need a run. They need 40-odd handles. They need a 50% move. I mean, obviously, this is the biotech, and this is kind of now the biotech, so that isn't as outlandish as it may seem, but still a 50% move by August. This is kind of your definition of swinging for the fences. Would you concur, sir?
Well, in the past, we have mocked trades like this, only to have it tossed back in our faces at a later date. So you have to say, though, they're not cheap. What is it? Like the August volatility is in the mid-50s for I mean, I guess it could happen. I think with this drug, by the way, I think they would just, I don't know if they're going to make a lot of money selling this drug, right? Because of course there would be demand for it, but I think it's one of those things where, it's all the optics are so bad around all of this and the drug companies anyway, if they make something useful, I think they would provide it for as low cost as possible to keep the production going. I don't know. It just gives me one of those things. I own some Gilead. I've had it for a while. I think I bought it in the low 70s. It hasn't really done very much in the last couple of years. Paid a good dividend. But I think, yes, hopefully this drug works. It certainly seems like it works a little bit. I don't know if it's going to be the hype inducer unless, the trials just come out sort of blockbustery. But it doesn't seem like that's really what the data is up to now. So, maybe those 125s could work, or it might be somebody, it could be somebody covering a short as well. Just, okay, I'm going to buy some calls and whack out some stock and see if we could, if we can get through all this. So it feels like a bridge too far, even for a drug like this to add that much to the market cap. But let's see, it's $104 billion. So that would mean this drug is worth $50 billion. Looking forward, unless it was like a dead cure and they sold 6 billion doses of it, I guess. I mean, I could see that. But I don't know if it's enough to move the needle as far as, I wanted to, but I haven't seen that much in the data. So I think it's just a tough one.
I think we're all hoping for it, right? We're all hoping for that magic pill we take tomorrow and it all goes away. So we'd all love to see Gilead up at that level. That means things are really blowing the doors off. But you're right, it's going to be hard. And there's issues behind the scenes for manufacturing that many doses in a reliable amount of time. Is it really have that much efficacy to be worth it? You're right. The margins on it are going to be questionable. If they're making a ton of money, that's going to be a headline, even though maybe in this scenario people wouldn't be too upset about that because they just want to get it out there. But still, yeah, there's a lot to unpack there. But still, 125 by August. That might be our proverbial bridge too far. Andrew, you also mentioned Beyond Meat. They just ticked at exactly 100 even right now. Ticker of source Beyond, BYND. They've been a hot name, particularly right now as we're seeing all these beef shortages and pork shortages and plants shutting down. And what are we going to do with the cattle? And we're going to get to more of that and Twyfon a little bit. A lot of vol out there in a lot of those names that you might imagine these days, pigs and cattle being have to be maybe euthanized because they can't be slaughtered. Kind of analogous to what we saw in the oil space for a little bit, where you can't do anything with it. You got to get rid of it as quickly as you can. We haven't seen that level of panic out there, at least not yet this week out there, because it looks like there's some other alternatives, or actually some of them are actually rallying right now. We'll get to that again. Break all that fun stuff down into iPhone a little bit. But Beyond Meat at exactly $100 right now, kind of unched on the day, off slightly. They only have pretty much a year's worth of data in them, so not a lot to analyze here. But a year ago they were, of course, about 65 3/4. They rallied up to their height shortly after their onset there. It came in July. They hit 234, almost 235. Oh, how the mighty, or perhaps the overpriced, have fallen. They kind of took it on the chin pretty quickly. By November 1st, they were trading $82. So they didn't wait for this pandemic to come. They got annihilated by pretty much 2/3 pretty quickly. And then they rallied again by the beginning of this year. They're actually back up to about 130. And then we all know what happened later on this year, and they kind of sold off again down to $60, 32 out there. So that was pretty ugly. And now they're back up again. So about 40 handles from there. So Andrew 2.0, if you could again, sir, please quickly regale us with what exactly the paper was you saw again in Beyond Meat, sir.
Yeah, so I saw some of the May 22 115 calls go off. Those were bought. Again, it's interesting with all the meat facilities closed. I don't know how much of a catalyst that was, but the interesting part beyond that is the short interest is very, very high. It's hated. Everyone thinks this is a zero. Technically, on a daily chart, you could see it just filled a gap. Monthly, it rotated on a monthly chart over a huge candle. So we'll see if it has a pre-earnings run in it. Perhaps earnings, as we know, binary event can go either way. But we'll see if that one runs into the print next week. All
right. And last but not least, we're going to go back. All the way back to Monday's show. Listeners, if you recall back then, myself and the Meatball parsed some interesting, very, very near-term paper that was going up in a lot of names, including Bed Bath & Beyond, ticker symbol BBBY. At the time, we said, we're going to know pretty quickly if this guy's on the right track or not, because there were earnings pretty much right on the slew of that. I forgot if they were right before that name or slightly after that number or that trade that we saw. But either way, on Monday, we saw about 2,000 of the Bed Bath & Beyond 5.5 calls. This is the cheapie name out here, going up for 55 cents. So they were pretty rich for what was going on out there. Effectively, 10% of the price of the stock this guy was paying for a very quick swing at the bat. These were May, but these were expiring tomorrow. These are expiring on the first 5.5 calls. So this guy was swinging for the fences. He paid through the offer, a penny through the offer, to get these 2,000 done out there. And it looked like this guy pretty much hit a home run, Mr. Rock Lobster. The stock was off to the races shortly after that. In fact, the next day it hit a high of $7.69. So these calls were over $2 in the money almost instantly. In fact, they hit a high themselves of $2.23. So this guy made quite a bit out there if he unloaded them at the high. The stock right now, right around $6.22 or so. So it's come off those highs. But still, these calls are still trading for around 70 cents. They're still pretty firmly in the money right now. So even if somehow he waited, and it is interesting because coming into today, there still were 1,900 open on this strike. So it isn't a little bit less than the volume we saw. So hopefully that reflects a surge in action on that strike heading into their earnings number and the big announcement. And then, of course, because they said their same-store sales were very good, I believe, on Monday, despite the fact that no one can go to a store right now. People are buying a lot online right now, so that was hence drove the big surge in BBBY. But still 1,900 were coming into today, and only a few have traded today so far. So let's hope, Mr. Rock Lobster, hope this guy, I'm going to be charitable. I'm going to say this guy put these on for 55 cents, and he took them off at the high for $2.23. What do you think about that, sir?
You know what? I don't think we give a lot of charity to these guys in general, but they certainly, it looks like they made some money no matter what. At this point, it would be hard to mess it up, but if you weren't taking that, when you have a triple, like a real triple, 50 cents to $1.50 or 50 cents to $2, that's pretty good. I think you might, I think you would want to take that, but that's just me,
Yeah, you want to take that. It's a good almost not quite 400K, about 339,000. Not bad for Not even a day's work, really, if you took them off at the high. Pretty good business out there. Let's see what business you guys have in store for us. It is Thursday. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is where you guys take the reins. This is also where I like that we have Andrew 2.0 joining us because he makes my job easier. We like hearing from you guys, and we get a ton of your questions too. But I also like hearing what the clients over there at TradeStation, what the heck are they up to? What are they asking? What do they want to know about? We love the boots on the ground feedback from the brokerage clients out there. So, Mr. Andrew, now you got a bunch of questions, it sounds like, from a lot of your clients. Hit us with the first one, sir. What are you hearing from your clients right now, sir?
Yeah, so I had one client ask, they said, I want to improve as an options trader. What would be the best course of action to take? So what I would say is the most important thing is learning and preparation outside of market hours is really the key to success. Of course, everyone wants to be in the heat of battle and trading during market hours. But if you are new, I would, listen to a podcast like this as much as possible. Take advantage of a lot of the educational tools we offer here at TradeStation for every level of experience. You also want to set up your scans on the weekend so that when the market does open, you're prepared, you have your alerts set rather than kind of being a deer in headlights. Also, you want to study yourself. In TradeStation, we have the Portfolio Maestro tool, which allows you to do that. You can look at your equity curve, etc. So if your viewers are interested in any of that, you could go to tradestation.com/optionsinsider. We have some great deals for you there, and you can learn about all of our educational tools.
Yeah, a good place to start. He said the link, tradestation.com/optionsinsider. From there, you can kick the tires and light the fires and all these cool stuff we're talking about here, the blog and the educational tools. Again, it sounds like you're already a TradeStation client, the person asking this question, so that's always the first go-to place. Take advantage of the free educational resources of your broker. If you're at TradeStation, take advantage of theirs. If you're somewhere else, take advantage of those. Wherever you can to learn is always a good thing. If you like to learn on your own schedule and on your own time, of course, on-demand shows like these and indeed our Options Bootcamp program and Options Playbook Radio, all of those are great for kind of learning on your own schedule. You listen to those shows from episode 1 all the way through to whatever, over 300 on OPR. I forgot what number Bootcamp's on these days. If you listen to those all the way through, and a lot of people have a lot of time on their hands right now, so I know a lot of you are doing just that. Those will definitely put you in good stead. Then if you want to advance to the pro level, the pro grade, Mr. Rocklop, so let's say they're ready to upgrade their learning a little bit. What do you recommend for them, sir?
Well, we do have this little option education service called optionpit.com. Have you heard of it before?
I have not. Tell me more.
Where we teach people how to trade. We actually have a suite of sheets with theoretical values, trying to teach people how to price options, to trade them based around expected moves. So trying to find some edge before you put a trade on. We have 320 students now. So our business actually has never been better. I wish the rest of the world was doing better, but people want to learn how this stuff works. And, we have people trading it all day long, and the pit crazies in the pro chat and all of our students. So check on optionpit.com. We have more stuff that one person could possibly ever want to learn trading stock options.
There you go. I can recommend the crazies. I call them crazies, but it's a term of endearment. They're a very nice kind of crazy out there. All right, Andrew 2.0, you got more in store for us. Hit us, sir. What else you got?
Oh, sure. Yeah, so another client was asking what I think about volatility at these levels. One takeaway I have is that while the market ripped yesterday, he said the small caps, IWMs ripped about 5%, Qs ripped over 3%. One interesting thing is the VIX did not make lower lows. So that's always something you want to watch. Again, it's not the end of the world, but the fact that we are now coming into resistance as far as price and moving averages go, a pickup in volatility would not be surprising to me at all. We've hit some fib extension targets, and I've seen a little bit of giddiness that seems to be picking up. So we might be in for a little bit of short-term volatility. It's hard to get too bearish, though, until we get a little bit more price confirmation to the downside. One thing I would mention is sell in May and go away has failed in recent years. In fact, 7 of the last 8 years, the May to October period has been green for stocks. So something to keep in the back of your mind. Of course, 2020 is not an ordinary year, so we'll take it one day at a time.
I like that term, giddy volatility. I like that. We're in the giddy phase of volatility. But yeah, there's a lot to unpack. We could spend a whole show. In fact, we do that every week. We're going to do that again tomorrow on Volatility Views. If you want a whole show about all things volatility, listeners, check that one out. Meanwhile, though, I know you guys, we touched on the top of the show. I know you guys have heated thoughts and opinions on this one, so we got to get back into it. It is the debate, the question of the day. What the heck's going on with USO? This particular question, a lot of you have other ones. This one comes from Gels, perhaps Gelsy. They want to know, are you more or less upbeat about USO at these levels? I will kick things off by giving you a little bit of we asked you this question effectively last week. I was surprised at how contentious it was with our audience. We asked you, do you think, very simply, you think USO is going to survive till the end of the year? Is it going to be trading at the end of the year, or is it going to go the way of like an XIV and have to be shut down? And the answer was pretty tight. 55%, just a slight majority saying yes, 45% saying no. Andrew 2.0, I guess we'll start with you because you kind of have expressed your views on this already. It sounds like what you said at the top of the show, you view the reverse split as a pretty big red flag and you want to stay away from this one. So I guess your answer to Gels would be you are less upbeat at these levels, sir.
Correct. If I was a betting man, I would say it will probably be a zero. I've seen some really smart people talking about this ETF, billionaires in fact, and they think that's the way it's going. Right now they're in a fight for their lives, and I kind of agree with you. They did everything they possibly can. They got out of those kind of front month futures. They rolled, I think it was to the July or August futures, but it's really a struggle for them. And one thing I've seen in stocks as well as ETFs, as I mentioned before, is when you see those reverse splits, I tend to stay away from those.
Not a bad rule of thumb, certainly, to see what the heck's going on out there. Uncle Mike, I know you like XLE and a few others out there, maybe some of the individual, mining and refining stocks out there as well. What are your thoughts on USO? And as Gels wants to know, are you more or less upbeat at these levels?
Definitely less upbeat on USO. I think that it's USO and UNG, I've been against trading them unless you are doing something specific to trade the predictably crappiness of them for a long time. I think that just whenever you're rolling futures, you're asking for trouble if you're looking to hold it, and it's kind of showing that right now. I'm shocked that they've lasted this long, and I probably would have said that 5 years ago, quite honestly. I think I even have said, I think I even used, I think it was UNG as like an illustration in my book on why not to trade that or USO as a matter of fact. So I think that when you have an ETF that's trading the roll, unless you hook up with the Rock Lobster or Seabass on how to trade predictably crappy instruments, it's really not something that you want to be holding on to.
Yeah, it's interesting. Gels asked about these levels. I assume they mean the price levels. I'm not as driven by the price levels. I'm more intrigued by what they're doing behind the scenes. And again, we did a whole breakdown of this on TWIFO last week. And I will say this. I mean, I think I like this new modern incarnation of USO more than the old, as Uncle Mike said, predictably crappy one that just tried to replicate front month, did a pretty poor job of it, got crushed by roll yields on a very regular rolling schedule. The whole market could fade them. You kind of knew what you got with this one. The flip side of this is you don't really know what you have right now. The composition is changing every day. But if you ask me right now, would I rather have something that's trying to roll front month WTI every month and getting annihilated as that future goes to negative or somewhere near that every month, and also has a set roll schedule that everyone could fade, or would I prefer to have something that uses a little bit of its own knowledge of the space and also tries to spread out across the term structure to insulate itself from those crazy shocks going on in the front month? I would say definitely the latter, and that's exactly what they did. So price level, forget that. It's just an 8-to-1 split that's kind of meaningless right now. It's more about what they're doing behind the scenes. And I do have to say that encourages me more. I can certainly still say there's definitely a lot of caution with this one. I wouldn't say dive in with both feet at any level. These are still Franken products, but that does give me a little bit more of a note of optimism that they are taking the steps that if I was running this thing, I would take to try to keep this thing alive and fighting and living on and living to trade another day. And speaking of another day, we have to look ahead into the future. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what the heck we're watching for the rest of this week. And there are still some earnings popping off later this week. Well, after the bell even today, like we mentioned, we've got a little bit of a thing called the Fruit Company coming off after the bell. We've got Gilead, we got Visa, Whirlpool, Western Digital, tomorrow Exxon Mobil, Chevron, a lot of names going to be watching those. Honeywell out there. Oil has more in the radar these days than I could ever remember in recent history out there. So a lot of names popping off, as well as Gilead, a big name everyone's watching out there as well. So earnings season hot and heavy right now, listeners. Let's go back around the horn the way we just went. Let's start with Uncle Mike. Mr. Uncle Mike, sir, what do you have your eye on? What's on your radar for the rest of this week into the weekend?
Well, just want to see what's happening tomorrow. I mean, 2,900, we did close above the 2,900 level in the S&P, and that's the key level. It's the 60% retracement from the all-time highs to from the all-time highs to our recent lows a couple months ago. And so that's a key level that we got to get through, and then waiting to see if we can get through that, as well as the 3,000 level on the SPX, and then from there, we'll see if we can look to the new all-time highs. But I think right now it's very much a numbers game, not only with what I just mentioned, but also with the virus. And I'm watching Georgia to see if they have any crazy news coming out from there, because they seem to be the state that is trying to open up first.
I will say, if you are on this show anytime in the foreseeable future saying you're never been better time to sell than now thing, I will be deeply dubious and deeply skeptical of those new all-time highs. But that said, the market doesn't care. It's going to rally or how it's going to rally. But if we're hitting new all-time highs with this still all going on out there, that would be interesting, I think, to say the least. Mr. Andrew 2.0, same question for you, sir. What are you keeping an eye on? And what are the TradeStation folks? What are they watching out there for the rest of this week?
So I would agree. I mean, we're coming up to this level in SPY or S&P 500 where we have this daily open gap. We have kind of this flat 200-day moving average. So our clients are going to be watching, of course, the big ones, Apple, Amazon, and not so much the earnings numbers themselves, which is, we all know they're going to be terrible. It's more the reaction to earning. That's why when people ask me what have stocks have been doing and I tell them they've been rallying, they're always shocked. But you always want to put price above everything else. And if there's no better time to learn than now. Not too many people thought we would have this V-shaped rally. I'm definitely less aggressive. I would wait for a reset. And as we said, volatility is coming into some important levels here.
All right. And last but not least, old school Andrew 1.0, sir. What are you and your crazies in the pit chat and the Vol Trading Club? What are you guys watching for the rest of this week? At least until we can gather together here on Vol Views tomorrow, sir.
Mostly just how this much of a rally we can get here out of this rally for vol, and if this one is sustained. It just doesn't feel like it's going to be, but as Andrew 2.0, I like what he said, you need for vol to go lower, you need to make new lows, and we couldn't quite do that. We got to a lower level yesterday, but, vol picked right back up again, so it needs to go down. So we still hasn't had that yet. And, the reality of Main Street is not doing well that's kind of a big if out there. Even though I'm as hopeful as TOSAW and Andrew 2.0 is, still I'd like to see a little more positive Main Street action here in the short term.
Thank you for that, Andrew 1.0 there. That music, unfortunately, listeners, means we have come to the end at least of this journey. If you're saying to yourself, I need a little more in the old air holes, don't worry. Got you covered. In fact, if you're listening live, you're going to get maybe a boot camp, maybe an OPR in the interim, then we'll be back in exactly half an hour with some cohorts, some special guests on TWIFO to talk all things going on the futures option side of the fence. We're going to talk some lean hogs, of course, WTI and crude, probably some small cap equities. They're leading the dance out there this week as well as a whole bunch of others. So stay tuned for that as well. If you listen after the fact, let's hit next on your player of choice. Before we go, let's go back around the horn. Let's start with Andrew 1.0. I feel bad. He's already been usurped by Andrew 2.0. So Mr. Andrew 1.0, first off, do you feel like you've already been replaced? And then B, if folks want to give you a little bit of encouragement and they want to check out some of your classes, where should they go? What should they do?
Go to optionpit.com. Mark is doing a webinar tonight. This is Thursday at 8 p.m. Eastern Time. I think it's 8 p.m. Eastern Time anyway. Go check it out. Go to the website. All right.
There you go.
Get your learning on.
There you go. Optionpit.com. Get your learning on. Now we head on out to the new and improved, much cleaner Andrew 2.0. Mr. Andrew 2.0, sir. If folks are intrigued by everything you mentioned, the scanning tools, the unusual activity, the educational stuff, and they want to kick the tires for themselves over there at TradeStation Land, where should they go? What should they do, sir?
Once again, you're going to want to visit tradestation.com/optionsinsider. tradestation.com/optionsinsider. TradeStation has any tool you can think of, regardless of strategy, and we have all the education you need to succeed in the market.
There you go. You heard the man. TradeStation.com/optionsinsider. TradeStation loves to know that you're listening to the program and that you're checking out what they got. So if you go check it out, we'd love you to see it. Go to the blog and everything else. But start your journey. TradeStation.com/optionsinsider. So they know you're coming from us. So they can say hello. Options Insider fans, and give you some fun little tidbits and nuggets along the way. Speaking of tidbits and nuggets, Uncle Mike, if I want some tidbits or nuggets, or maybe I just want to be there when you pronounce to the world it's never been a better time to sell than now, where should I go? What should I do?
Well, normally I'd say come to 303 East Main Street in St. Charles, but not a lot of people can do that right now. So in the meantime, go to stcharleswealth.com, learn a little bit more about me, or even call me directly, 630-885-0017.
There you go. Hit the man up, stcharleswealth.com. Click on the Fox for fabulous prizes and riches. And if his compliance is listening, I am just joking. And on behalf of Uncle Mike, and the Rock Lobster, a.k.a. Andrew 1.0, and Andrew 2.0, and indeed myself, I want to thank all of you out there for downloading, for streaming, for subscribing, for sending in those questions. Keep them coming, for listening live. We love you guys, too. Remember, if you want to kick the tires, TradeStation.com/optionsinsider is the place to go. And don't go anywhere, though, if you're listening live, because we'll be back in exactly half an hour. Talk some TWIFO, talk some futures options, and we'll be back again tomorrow, 1 p.m., for Ball Views, and it kicks off again on Monday with more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available on the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.